Lalit Agarwal joins us, Chairman and Managing Director of V-Mart. Let's take our conversation forward to understand that how real is the slowdown? Is it just a perceived slowdown, or this is a real slowdown which is there in the rural India? Mr. Agarwal, good morning. Thank you for joining us. When I speak to some of your peers, the sense we are getting is that there is a slowdown, and especially a rural slowdown, and everybody is feeling the heat, including value retailers like yours. Is it true?
Yeah, I mean, definitely, there is a concern. There is a pressure
What's going
on
on?
the real consumer of Bharat, and those lower earning group member people who forms almost 70% of the population of India. They definitely have reeled under pressure of inflation, and their budgets, their household budgets, has gone down. So I think there they are struggling, and that is what is causing a little bit of slowdown. And we are seeing those slowdown right from post COVID environment, because post-COVID, during COVID, they lost some of their income, but post-COVID also, they couldn't regain back their income, as well as the kind of inflation which ate into their pocket. And then that's where what is affecting those kind of slowdown. But yeah, gradually, quarter on month, we are seeing betterment on those side. It is also an outcome of the feel good factor, which we call as the feel good that the consumer has in terms of their forward earning capabilities and earning abilities, and then the risk that they see in future, whether in terms of the Ukraine war or in terms of the recession coming in. So there was a lot of news in the media which make them little more conscious on their spending, and that's what we've seen. But period of month on month, we are seeing that getting improved. So the rate of such slowdown is going away.
Um, Which are the so I'll split my next question in two parts. On an aggregate basis, if you have to compare the current demand with pre-COVID, where does it stand? And which are the categories which have not recovered in a meaningful manner from the pre-COVID slump?
See, largely, I mean, we have last quarter we reported almost 11% degrowth from the pre-COVID times, from the same store, like for like stores perspective is concerned. So I mean that also I think incrementally is getting better, but still there's not we are not seeing a growth over the pre-COVID level. And categories, primarily categories of the apparel, because that's the biggest segment that we sell, and the fashion segment. So that we see there is some kind of degrowth which has happened there, especially in men's apparel and the women's apparel. The kids apparel continues to be where it is because people didn't stop spending on the kids apparel, but especially on the men's and the women's, we saw a little bit of degrowth.
Mr. Agarwal, morning. What about the outlook in terms of some of the low margin products? Is that what you're seeing traction in? Is that a bit of a concern in terms of what your margin recovery could look like as well? We have seen yarn prices as well correct, and your margins have managed to sharply correct. So do you think that the low margin products seeing traction could be a bit of a concern?
So I would not say low margin. I would say so there are different kind of models. So what happened if you understand the whole journey, because of the cotton yarn prices going up, most of the apparel manufacturers and brands and retailers, they took the price hike, and we also took a very steep price hike, almost one of the steepest price hike that we ever took in our 20-year journey. So which customer didn't like and consumer didn't appreciate. So we got the message in the last season, and we corrected our prices. We rolled back those prices now, and now we are seeing even the yarn prices coming down, but still not down to those levels. Still, from those base level, it is still 40% up. So the yarn prices are still up, not 70%, but 40%. But our prices, we have rolled back. We have done some innovation, some blending of the product, so that we are able to provide consumers a similar price point product. So especially lower price point products are getting much more attention and much more attraction. So we are seeing very good consumer coming back in the lower price point product, but still on the higher price point product, we are seeing a little bit of concern and stress. So that's where consumer are not spending on a higher price point product, and that is very logical because of their basket.
And I understand that you intend to take online at about 20% of your sales in the next 24 to 36 months. What's the game plan, and do you think it'll be margin accretive?
I mean, see, we don't see very differently in the margin perspective, because for us, almost all customers and all formats and all channels are equal, and we would have similar pricing in most of the channels. So I don't think margin will create a big impact on any of those. But yeah, largely it is all about the bent or the channel which the consumer are now preferring, or leapfrogging we call. So how do we try and take this as an opportunity and try and see whether our consumer base, which is the real Bharat consumer, are they adopting those digitalization? Because we have always believed that, because they buy 2 times a year clothes, they don't want to look at a photograph and buy their needs, and they do the investment. But yeah, things are changing. Things are changing with the youngsters and the youth. So we believe over the next 3 to 4 years, there will be a lot of changes which will come in. And if we can grab onto those opportunities, that's how we are getting prepared ourselves through the new acquisition that we did of LimeRoad.
Question is, sir, if there is a slowdown, value retail should do well. But it is the reverse. This time around, luxury is doing very well, mid-market is doing reasonably well, but value retailing, whether it is V-Mart or D-Mart, has taken the highest hit.
I mean, it's a K graph economy which is getting built up, and we are seeing those K becoming more steeper and steeper post-COVID. And that's what it affected into people who are earning, and business houses, or businessmen or rich people, which we call the top 15-20% of the demography. And they are definitely have got benefited, whether they are professionals or whether they are doing their own businesses or running industries or in stock market or property market. So most of them have their incomes have gone up, and they are seeing a betterment, and they didn't spend too much during COVID. So all of those revenge shopping and all of those revenge tourism came into effect, and that's what we are seeing in malls and airports and the tourist places. So I think on the other side, if you look at the poor people and the people who used to struggle, for them, this COVID period of 18 months, they lost almost 6 months of salary or 6 months of their income, monthly income. So that impact caused the pain, and post that the inflation also got into their pocket. So I think combine the two and look at those small town consumer, or those consumer who earn between 20 to 30,000 rupees. And we spoke to a lot of consumers, and we realized that these consumers were struggling to build onto the saving of 2-3,000 that they used to do earlier, and now they are on a little bit of debt. So that is why they want to reduce their discretionary spend, and that is what is happening in this particular segment, which is the below the line of the demography.
We are in for a hard summer and let's say poor monsoon this year. Will this stress in the rural economy only multiply? Because that's my other worry, that this year, at least so far, the weather patterns have been quite erratic.
I mean, see, we on the other side, I say that in the last 2 years, the monsoon has been so good, and the crop has been so good, the crop yield has been good, the MSPs has been good, and still the rural has a pressure. So I don't know how much it is directly going to be affected, but yeah, I think it is more about the feel good factor, which I mentioned. And if that goes better, people start spending, and people also start borrowing if they want to, because they will not stop their spending. So it's all about feel good factor, and I feel as the feel good factor of India is bettering, our Bharat is bettering, the way the Prime Minister or the nation is speaking, the government is speaking about it, and the infra investment which is coming in. And I think all of those will improve the economy. Even the election period brings in a lot of money in the economy. So that also should help the economy to a greater extent in the coming year.
Give me a sub-trend. When I say a sub-trend, which particular geography, including your acquisitions, growth is above COVID? Which are the categories which you represent, the growth is not recovering? Give me a sub-trend so that we know that how the geographical distribution is moving.
So on the geographical sub-trend, if I look at it, especially our core belt of UP and Bihar, we have seen the pressure the most. And that is what we also, when we speak to our peer group people, FMCG companies, even there they've experienced it a little more steep. So the pressure on the degrowth has been more in the UP and Bihar zone. But otherwise, in the other northern territory, as well as the territories of southern India and eastern India, we have seen a little better perspective on the percentage of degrowth that has happened on a like-for-like store basis. But otherwise, I think, as I said about the categories, I've already told you that the major hit the head of the family is taking, so that he doesn't spend too much. They are spending for their kids. They are spending, especially women are also curbing on the spending, but still they are spending better than men. But men is spending a little lesser than everyone else in that particular zone.
All right. Thank you so much, Mr. Agarwal, for joining in and giving us a deeper understanding of how the business is shaping up. Time